Morning, folks. How are you? Hope you're doing well. Happy Thursday. It is a good day. So, um, I'm going to do a real brief review of the Asian session trade that I did and shared on my X feed on the Asian session Tuesday evening. So, we were approaching the 10 o'clock hour. So, using 950 1010 macro after a series of many up close days. And if you go back to the live streams that I was doing in here, um, once it makes its low and takes out the sell side we were aiming for, it could then violently run right back up. And I use those words quickly to go for the relative equal highs back here. And I'm not sure if you noticed on your charts yet, but we've had a pretty dynamic rally to the upside. So again, higher time frames. You guys are begging me to come off these lower time frames, talk about higher time frames. Dailies kind of like the highest time frame that I would be trading off of. I'm not going to trade on a weekly chart, right? So I want to take your attention to where we were at yesterday and the day before. So here's Tuesday. So here's Tuesday during the Asian session. In this portion of that run right here, I want you to look at that wick. This wick right here, inside this portion of the range right there, this, while we were trading up to it, this is a premium array. Okay. Before we even consider taking the buy side, we have to consider this is a potential area to look for a tradable format for a trade. Even though it's a strong bull market, I'm going to give you the details as to what I used. And then we're going to borrow this and put this down here. So then looking at that little gap between this candlestick's high and this candlestick's low. Okay. Since it's an up close candle right here, that's a potential inversion fair value gap and or a means to use it for trading related business. Okay. So this is a key level because it's part of a higher time frame turning point. It was used in here, here. We drew up into it there. But now back to this wick. When we're below a wick and we treat wicks as gaps, okay, if we draw our fib on that, we don't need every level here. We don't need the upper levels, just the consequent encouragement, and then the low. So if we look at it through this perspective, price was coming up Tuesday into this wick, into this gap. So there's a lot of reason to anticipate price action in here. So if we can get into this wick and trade up into, say, the consequent encroachment or anything below that, it may act as a key level. Now, if we include that with buy side, so if we're looking for a turtle soup type scenario, let's go into a 1 minute time frame. And we'll go right to the time I already have set for us. Isn't that convenient? Okay. And then we'll scrub back a little bit. Okay. So we have buy side here, buy side here, and then we ran up one more time. The key takeaway is the time. So if we look at 950 and 10, it's your macro. And we'll get rid of that middle line because it's bothersome for me. Okay, so anything during this time, is a good opportunity to hunt the setup? Well, we have buy sell liquidity pool there. Is this during the macro time? No. And then we have this buy side here. When it ran above that, now we ran this buy side and then entering the macro time, we're above the original buy side. So it's two stages of buy side liquidity. We can use this up close candle right here as a bearish fair value gap right there. Okay. So anywhere between consequent encroachment of this wick right here, because you can see they already used it there and it's sold off, that tells me I'm very, very likely to see it trade lower. So if it's going to trade lower, what do I want to aim for? Well, we have a pool of liquidity there, but that's it's too shallow. And then we have this one here, which is nice. And then we have these gaps in here. That's nice as a partial, even if it wants to stop and not go below this low. I wanted this low, but because of the type of volatility we have right now and the fickleness of price action, I chose to use this low here. So we'll annotate those. And I actually did the recording from the beginning of the trade all the way to the completion, and I posted it on my X account. So you can watch the whole thing from beginning to end. So if you're just watching this for the first time, you're thinking this is cherry picked, this is all hindsight discussion. You actually see the whole thing from the beginning to end, every entry, everything. Okay, so I actually called the whole business around the fair value gaps too, but I'm going to leave all that business out. You can watch the stream or the recording on my X feed. I posted I was looking for it, and I was watching the liquidity, and then the fair value gap there that may become a inversion fair value gap, which you see it actually does here. So I'll include that just for the completeness sake of the video. Okay, and we'll add the half mark. There's consequent encroachment there. Okay, so if I go in and I add, notice there's a green dot up here. See that? So watch what happens when I add the executions. If this was done in market replay, I wouldn't be able to do this. They wouldn't appear while showing this. And if you do market replay executions, as soon as you try to show live data, or since these are real executions, if you have real executions outside of market replay, as soon as you toggle market replay, your execution errors will disappear. So this is not market replay. Okay. Just want to toss it in there because there's a lot of goobers still sending me emails saying it's market replay, and I don't know what to tell you. So anyway, using the bearish fair value gap there, we traded up into it on this candlestick and started adding all that in there. And then right in here, I'll have to go a little bit higher up on the chart, and you'll see that right there. It's right underneath the mouse. Can you see that? So I'm executing inside that volume imbalance right there. Okay. And then the market drops lower, creates a small little inefficiency here. They use it several times, then sells off, takes out that swing low there, consolidates a little bit, trades up into the gap, leaves the upper portion of it open. So that's nice. It's breakaway. Breaks below it. Bodies are outside of the inversion fair value gap that I called attention to before it even traded there. Uses the high of it there. That's probably random. There's no concern for any other retail logic needed there. And sells off and goes right below the low where I'll take the first partial. You can see it traded below it. Then added one more there because we're inside of this gap. Okay, so if you look inside that gap, here to here, don't worry about the color. It's just for me to highlight There's me exiting at the low of it. So I'm getting the best case scenario exit on a partial. And then I had this low annotated. And you can see we're getting close to it there. I took a partial. And then finally, the limit order closes out right here below that low there. And in close proximity to what would be the liquidity below that low there. And then we traded down into that inversion fair value gap on the daily chart, or not inversion, the fair value gap, which became a bullish reclaimed fair value gap. And then we started seeing the market rally up and started using that same lower quadrant level, which is probably random too. So hopefully this was insightful to you. Until I talk to you later on in the live stream, be safe.